Welcome to RANsquawk's e-morning briefing for Wednesday the 4th of November 2009. Just gone through 11 o'clock now in London. So first off, just a bit of a recap on the overnight news, starting with Asia. Did see some positive sentiment. The Nikkei did close up some 0.4%. In particular to the Japanese economy, some comments from Shirakawa, the governor. He said the central bank will maintain its very easy monetary policy and that the country's economic pickup is likely to remain moderate though. Separately though, more positive from the World Bank. They actually raised its forecast for Chinese growth this year. They projected a slightly faster pace of expansion in 2010. They said the Chinese GDP will increase 8.4% this year with 8.7% growth for 2010. Coming out of the US, obviously interest today will be at 7:15 London time for the Federal Reserve interest rate decision. Bloomberg writing an article that the Fed is likely to signal the economy is improving, but to keep interest rates on low. One of the key things that participants will be looking out for today will be the specific language, and if indeed, as speculation has grown, whether they change that they'll keep rates low for an extended period. Some, though, saying that may be too early in terms of this month's decision, and it could be more likely for next month. But obviously, we'll be keeping a close eye there. Elsewhere, US Treasury officials said that currencies may be discussed at G20, and the G20 should avoid removing stimulus too early, so they continue to stick to that rhetoric we've heard from various global officials. Elsewhere, out of Europe, ECB's Weber said economic freefall has stopped, though crisis not yet over. Stabilisation is not complete. And just noting for the energy markets, the API numbers came out after night's pit close yesterday, showed a crude oil drawdown of just over 3 million. Gasoline had a build of 400,000, distillates was a build of 1.8 million. Worth noting as well from the Journal, could get some attention at the pit open today. The International Energy Agency, the IEA, will substantially downgrade its long-term oil demand forecast, its annual energy outlook next week, which would be the second cut in a row, according to the Wall Street Journal. In terms of where we stand at the moment, though, in the UK and Europe, we are off to a positive start. We're up around 1% in terms of the DAX and CAC index. Worth noting, minor underperformance for the FTSE 100 in the UK. That's with the major components, both Royal Dutch Shell's A and B shares, as well as GlaxoSmithKline, both trading ex-dividend today. We've also seen on the data front some pretty solid numbers of gradual improvements across the Eurozone, especially Italy in the service PMI numbers. And on individual breakdown, we've had various good reports on the quarterly earnings out of UK and Europe, the likes of Total, Marks & Spencer's and Next, just to name a few. Also, Renault has benefited after Nissan drastically cut back and reduced or narrowed the size of their full-year loss that they forecast. Again, that's seen Renault shares move over 5% higher in the session, as well as Infineon also moving higher on some speculation this morning. The German chipmaker could be taken over by LG Electronics. In terms of other things that we have seen, obviously with that healthy risk appetite returning to the markets today, we've seen the dollar index move lower around 0.25%, which has seen spot gold hit another record high, continuing from the gain seen yesterday, being mainly attributed to those Indian purchase around $6.7 billion worth of gold from the IMF. The record high now standing at 1,095, and obviously it's keeping a close eye on 1,100 in the US session. In turn then, a total flip on the sector basis. We are seeing basic materials as well as oil and gas, and also financials are outperforming. WTI crude futures as well as we speak, that's following in tandem with the general weaker dollar, currently up $80 now on the session. And just a quick recap in terms of the UK markets, gilt futures are down a little bit, underperforming at the moment. EGBs, that's after nationwide consumer confidence did come in at 72, which is its highest level in 1.5 years and remain the same as the previous month. And as well, the UK markets in terms of fixed income have had to take on £2 billion worth of a 2034 issue, which was, in terms of bid to cover, rather modest in its pickup. Looking ahead then, we'll have the weekly NBA mortgage app numbers at midday, followed by challenge job cuts at 12:30 London time. Also ahead of non-farms today, we'll see the ADP employment change. Analysts and participants keeping a close eye to gauge where they think payrolls will come out. Also, the ISM non-manufacturing report will be due at 3 o'clock London, so that's 9 in Chicago. In particular, again, we'll keep a close eye on the employment constituent within that report, having seen quite a large increase in the ISM report earlier in the week. DOE numbers, weekly figures are due at 3:30 to 9:30 in Chicago. The Fed decision, as mentioned, 7:15, so that will be 1:15 in Chicago. Elsewhere, from the US fixed income markets, we'll be looking out for 310 30-year note refunding announcement. Analysts looking for around 80 billion total size to be announced. that allied as well to the various quarterly refunding announcements that are to come, as well as comments on their debt ceiling in the US government, all due at around 3 o'clock London. Earnings-wise, companies of note today include Allstate, Comcast, Cisco, Devon, Prudential, Hope Homes and Qualcomm.